Yeah. Is this the market saying that actually we don't want this thing to be decentralized? We're happy that it's in control of like the Trump family or whatever. Welcome back to Bitcoin.com's The Weekly. I'm Graham Stone, joined by Bitcoin.com News' David Sensel. Let's get into the weekly recap of the biggest stories in the Bitcoin and cryptoverse. And we'll start with some intrigue around the Trump family-backed crypto project, World Liberty Financial. David, kick us off.
Yeah, so World Liberty Financial had a crazy first week. This seems to be a pattern for Trump-backed crypto projects. So let's start with how it began. World Liberty Financial, it started trading on Monday, I believe, and it printed an all-time high of around 33 cents early in the day, and then things started to go south. It traded down for about 2 days, and after about 2 days, there was a crazy story on, believe it was the 4th, which was reports on crypto Twitter that Justin Sun's wallet addresses were being blacklisted. These reports were going around. I remember seeing them live. Are they true? Are they not true? Well, it was basically corroborated or verified by His Excellency himself when he also posted later in the day that, yes, his accounts were being frozen and it was unjust. He was a good member in good standing, wasn't trying to sell or dump tokens.
Justin Sun, of course, the biggest private holder of World Liberty Financial token. Apparently, he bought around 20% of the public sale amount, and he owns, I think, 3% of the total supply. And I believe that 20% of the token sale purchases are already vested, meaning you can sell if you want to.
Yeah, I'm not exactly sure. I know he has something like 2 billion tokens, I believe, something like that. And most of them are locked. But he, again, in this post, he says that he has no intention of selling. The rumors around this, though, Graham, there's so many different rumors. Again, you don't really know, but the rumor around this is that he has promised not to sell, but HTX, which is basically a Justin Sun exchange in everything but name, it attracted its users to lock up or stake a WLFI with a high APR. I think it was 20%. And Justin Sun, or HTX, was then selling its users tokens. Okay, so the exchange started selling the users tokens, and then once the token was live and going down a lot, I think, the users started to unstake them, and they wanted to take custody and probably sell their own tokens. And because of that, Sun started to have to take his own personal tokens, send them to the exchange to meet the users' demand. And I mean, again, these are all rumors. I don't think they're substantiated, but this is supposedly what was happening. We don't really know. All right, so that's all happening. In comes the weekend, and a new story, related story in this whole World Liberty Financial thing. WLFI governance held a vote on whether to allocate all protocol-owned liquidity, fees to open market buybacks, and permanent burns of WLFI tokens. I wish there was an easier way to say that. It doesn't roll off the tongue. This move would directly reduce supply and align growth with token holder value, and it would fall into the revenue meta that Graham and we have talked about for many, many months. This would put it in line with more of a hyperliquid style price appreciation. Again, probably a very popular vote for small token holders. I don't know what the makeup is of this, but I imagine it doesn't really matter what any of us think. It only matters with what 2 or 3 token holders think, probably Justin Sun and whatever the foundation that holds the vast majority of these tokens. So it would be good if this were to pass, but really it'll come down to like 1 or 2 holders, and that's all, right?
And there was another story, basically, World Liberty Financial came out and said that, yes, they acknowledge the blacklisting of wallets, but they're just doing it to protect against phishing attacks or something. I'm not quite sure how that works, but you did see people come out and complain about their money being stolen. This guy, Bruno Svork, saying that, he had his wallet blacklisted. If you look into this thread, apparently it seems that this would be the reason for the blacklisting, that his wallet had 40 ETH exchange via Tornado Cash, which of course is that previously sanctioned, now not officially sanctioned, I think, protocol for mixing Ethereum, infamously used by Lazarus, the North Korean hacker group, crypto hacker group. Yeah, people getting the wallets blacklisted. World Liberty Financial saying they're looking into it. I don't know, a lot of drama going on here in the World Liberty Financial.
And Graham, I don't know what you would expect, but all of this doesn't sound decentralized at all. Of course, it sounds highly centralized. It sounds at the very least like it would shake confidence in the project, because it just seems like a black box and we don't really know what's going on. And even in some of the communications from different people who are associated with World Liberty Financial don't seem to be very clear, or to be slightly contradictory, or whatever. It doesn't really add up. But what happened to the price?
What happened to the price? I was just going to say, maybe it's the other way around. It's kind of rebounding, isn't it?
Oh, it's rebounded very, very much so, and it's rebounded in like the last 24 hours. It's up pretty bigly in terms of that. So interestingly,
is this the market? Yeah, is this the market saying that actually we don't want this thing to be really decentralized? We're happy that it's in control of like the Trump family or whatever, because that's why we bought into this in the first place.
We talked about this on Token Narratives, and there's a clip now going around which I find very embarrassing because it singles me out for having a bag. But it basically seems like I would say people who bought World Liberty Financial hopefully bought it for the right reasons, eyes open. Like, yeah, we're buying this because it's a kind of a play on the Trumps putting their thumbs on the scale. And the fact that they're putting their thumbs so obviously on the scale with these blacklisting addresses, you'd be like, oh, well, so this is working out exactly how for my investment thesis. Yeah. So I don't know.
Okay. Well, let's move on from World Liberty Financial, unless there's anything you'd like to add, and let's get into a little Bitcoin digital asset treasury company roundup. So let's see here. Okay. So we have a report from cryptoquant.com, which draws on-chain data. And the authors are saying that demand is cooling despite the headline records. So if you look at this chart here, we're showing the figures. Basically, the growth of Bitcoin DATs has leveled off here over the last month or two. We saw a lot of growth in the start of the year, post-Trump election, and it has basically leveled off. So still a lot of transactions, but buys are smaller. Yeah, basically the appetite per deal has waned. Now,
and you and I talked about this, like we haven't looked closely at the data and seen if it's been broken down, but we imagine that if you were to break apart the U.S. from this versus the rest of the world, the U.S. is probably slowed down a lot more than the rest of the world.
Yeah. Even more pronounced because the U.S. started this whole Bitcoin DAT game, and it's permeated around the world. So it kind of catching up, so still growing elsewhere. We have a little report here also from bitcointreasuries.net, which shows that the Bitcoin DATs now control 1 million BTC in total. So they broke the 1 million BTC milestone for the first time. That's about 5% of Bitcoin's supply held by digital asset treasury companies.
Pretty wild. All right.
Yeah.
Next up, we have Sora Ventures. They unveiled a Bitcoin treasury fund targeting $1 billion in purchases within 6 months. The backers have reportedly committed $200 million to start now. And essentially the goal is to buy Bitcoin over a defined window. And this whole thing is pitched as Asia's first fund of its kind. The initiative is designed as a central pool of institutional capital. It differs from companies that hold Bitcoin on their own books. The pool intends to support existing treasury and seed new ones. So it's kind of like an aggregator, right? It's it's not going to hold the Bitcoin directly. It's just going to power the companies that will hold the Bitcoin directly.
So Bitcoin treasury companies in Asia potentially getting a boost from this big fund.
Yeah. It sounds like a Nakamoto kind of thing, right? Like a David Bailey's Nakamoto, where they're trying to seed or be a part of a bunch of different treasury companies.
Yes. And speaking of Nakamoto, they're part of the on the table investing in Treasury, which is a new DAT in Europe, and that has raised $147 million. And it's aiming to become Europe's largest Bitcoin DAT. So the round, as mentioned, included Nakamoto Holdings, Winklevoss Capital, and a bunch of others. So they've already amassed 1,000 Bitcoin and will focus on entering European stock markets through a reverse listing with some company that no one's ever heard of called MKB NedSense. And their
what
aim
a terrible
is to be listed
name.
on it. Aim is to be listed on Amsterdam's Euronext.
But dude, just as an aside, I hate the name of this new vehicle, Treasury. Good Lord, it's right out of the strategy playbook. I mean, it's just going to make it, it's so annoying to then talk about treasury companies and you have to talk about a company called Treasury. Oh, Lord.
Yeah. Yeah.
Not a fan.
It's like it's like naming your internet company Internet.
Yes. But the last story, of course, is going to be about Strategy, the company formerly known as MicroStrategy. So this is the granddaddy of all these treasury plays, the one that kicked this off many years ago. Arthur Hayes at WebEx said that the goal of all of these digital asset treasury companies is to get big enough to be in an index so you can then receive passive funds. If anyone could do it, it had to be MicroStrategy. However, despite meeting all the requirements, Strategy was excluded from being added to the list that would bring to the S&P, right? And it's not going to get those massive flows. So there are a number of issues here. First and foremost, being added to something like the S&P 500 index is made in private. Some people I've heard are complaining about this. I think they need to grow up. The S&P 500 is not, it's not a government organization. They don't have to answer to anyone like that. So whatever.
But I mean, they do need to have an air of credible neutrality, I guess. But
do they
or not?
I mean,
I'm not sure.
It's an index, right?
It's not Ethereum.
It's not Ethereum. Nothing like that. I think it's just some like people like Bitcoin maxis. At least this is what I've heard. Bitcoin maxis upset about this. But anyway, the bigger thing is though, it definitely undermines one of the pillars that Strategy has been talking about. So their business model, if it makes sense, will get these passive flows, and people have to automatically allocate to the S&P. Would then have to allocate to buying Bitcoin. It's not happening, Graham.
Not happening just yet. We'll wait for the next round table from these insiders when I guess we have to wait another year. Maybe? How often do they readjust this? Every quarter, I think.
Something like that, yeah.
Yeah. So MS Strategy not included. Robinhood notably was included this time. So passive flows now coming to the Robinhood stock.
Bam. But they might hold some amount of Bitcoin on their balance sheet, but I think it's mostly
Robinhood is not a DAT. Yeah.
No.
All right, let's move on to an interesting story, which is that Galaxy Digital has partnered with Superstate to let stockholders tokenize and hold GLXY shares, Galaxy's shares on Solana. And this is supposedly the company claims this is the first instance of SEC registered public equity being issued directly on a major blockchain. So it's not a wrapper, it's not a synthetic representation. It's actually issued from the start on the blockchain. So it's not just adding a few more details. It's not permissionless. You have to go through KYC, get your Solana wallet whitelisted. That being said, there is some sort of advantage here, I guess. Basically, the registered shareholder list updates in real time when tokens change hands. Unlike, I guess, in the traditional method where you have to, the database has to be updated like more manually or in a less transparent fashion, I guess. Yeah, I mean, this could mark the start of a new era where some portion of new initial public offering shares are offered to companies like Superstate, who then issue them on the blockchain. Kind of like how in the current system, some portion of shares are offered to, let's say, JP Morgan, who then offer them to their clients.
It's pretty bizarre though, right? Like if you get into the details. So for example, you might think like, oh, what prevents me from, KYCing, getting the share, which is just a token on a blockchain, and then sending it to you, Graham, who is not KYCing. Well, they only allow sending and receiving amongst like a certain list of wallets. So these wallets,
yes. Very much a walled garden.
Yeah, but then even around that, Graham, you could get crypto being by its nature so open. Just off the top of my head, there are methods around that. For example, I could create a smart contract that holds my shares, and then based on that, it issues a new token, right? Which is just like a we have wrapped Ethereum, for example, right?
Yeah.
So you could put in.
Oh, I see.
I could right. You could put that in, and then I could send you that. I could send you that, right? And so then you get into these interesting dynamics, which still would be a derivative. It would be like a kind of a derivative of that, but you can start to get into just it might seem small and stupid, right? Oh, it's still such a walled garden kind of thing, but because it's crypto, you can start to really play around with a lot of things around it.
All right, so we'll be seeing how that unfolds. Definitely an interesting development. All right, moving on to our last stories for the week. We have some broad blockchain growth metrics reports being released. First up, we've got an analysis from Bitcoin.com news writer Jamie Redman, who dug into stablecoin metrics from DeFi Llama to compare the metrics from July to August, the month-over-month changes. So we saw a big jump. August saw a 92% jump in stablecoin transaction volume, reaching $3 trillion. And the number of transactions also climbed by almost 17% to 1.2 billion, showing that activity is heating up across multiple chains. Total stablecoin value is now at $284.5 billion. On August 1st, it was $267 billion, so around a 6.5% month-over-month increase in the total stablecoin market cap.
I mean, you gotta think this is this pretty big jump to me is based off of the Genius Act, right?
Yeah.
And I expect this only to accelerate, right? This is bigger institutions and more established companies are going to take more time to really ramp up their stablecoin strategy, and I think you'll just see this growth accelerate now that they have strong regulation in the U.S. They're going to just have these roadmaps come out. Last week, the Tempo L1 and Google's GCUL blockchain, again, I think are probably primarily focused on the stablecoin play. So to me, those are big signs that you're just going to see this explode, and this kind of growth is going to become normal for the foreseeable future.
I'd like to dive in more detail to what these corpo chains mean. Maybe we can discuss that on the next Token Narratives.
Definitely.
Which should be this Friday.
Yeah.
All right. So one other report, which is from Chainalysis. So Chainalysis, they publish a yearly report, the Global Crypto Adoption Index. This is the 6th time they've done it. And so we've got some interesting data coming out of this. First up, just looking at the ranking. So the way they typically rank this is weighted by GDP and purchasing power parity. So you've got the top 5 countries are India, the United States, Pakistan, Vietnam, and Brazil in terms of crypto adoption. But this is the first time they've done this, they've published a separate ranking. This one weighted by population. So relative to the population, it paints a different story. You've got Ukraine, Moldova, Georgia, Jordan, and Hong Kong. And the report notes that a combination of economic uncertainty, distrust in financial institutions, and strong technical literacy across the region might be the thing that's driving this picture here.
The only thing surprising from all of this, either the traditional way that they measure this or the new one, the two things that stand out. Number one, America in there. I find that surprising that America's adoption is increasing, and the only reason I think that's in the list is because of the current administration, and that America was kind of stunted for so long. But
so it's catching up.
It's catching up, but again, Americans don't need to use this technology at all, because if you're in America, the banking system and the traditional financial rails are good enough, right?
Right.
And so,
however,
you never really see that. Yeah.
Adoption is just defined as trading is included in adoption.
Yeah.
And America being the biggest financial market, people with a lot of money to play around, invest. They're adopting Bitcoin. The use case is trading.
Yeah. And then the other one is Hong Kong, right? I think that's a different use case than the others, which is where they wanted the Hong Kongers, all Chinese, but especially Hong Kongers, they want to get money out of the Chinese system. The whole reason for Hong Kong as a financial hub, the reason that the city had so much money in the first place, is it was the way to get money in and out of China, right? That's why it is the city it was. And then once China took over, that kind of closed. Crypto is a way to kind of continue that process of getting money in and out of China's closed financial system. And so, to me, those two seem anomalous. The others all make sense, like more emerging market kind of thing. And
distrust in traditional financial institutions. To me, that distrust is the key through line between whether it's Ukraine or Hong Kong. It seems similar to me. Anyway, one last thing to dive into here from Chainalysis's report is the growth rate comparing 2024 and 2025. So the biggest jump was in APAC, Latin America, and Sub-Saharan Africa. So all of those, the growth rate is, for APAC, it's like 70%, Latin America over 60%, and Sub-Saharan Africa around like 55%, all quite high. North America also saw a high growth rate compared to 2024, and then Europe and MENA lagging.
Yeah, and all that makes sense to me. That's kind of as you would expect. Yeah.
All right, David, I think that wraps it up for this week.
That's right.
Yeah, so catch us on Token Narratives this Friday, where we'll dive into these and other stories in more candid detail. And have a great week. Stay safe.